Welcome back to International Finance by Andy Kim, right? Today we're going to talk about international banking and money market, which is in chapter 11, and it's already week 11 as well, right? Time flies like a bullet, and I checked out your mid-semester teaching evaluation, and then overall you liked my lecture very much. Thank you very much. And then please keep on clicking like and subscription, and then spread it around to your friends as much as possible, please. Also, one of your complaints, right, was my usage of voice manipulation, okay? The monster voice or like a cartoon voice or whatever. You did not like it. So I'm not going to use it, but I realized that the microphone quality seems to be better if I don't manipulate my voice at all. Perhaps it's better than Blue Yeti? I don't know. Supposedly Blue Yeti is supposed to be better quality microphone, but I don't know why. But let's see. If you don't like it, tell me if you like Blue Yeti ones, all right? And international banking and money market, right? This is going to be another exciting class, yes. And here we bring a lot of international big named banks, right? What do you see? This colorful emblem over there, that's Rothschild, right? We're going to talk about it a little bit more later on. Especially, actually, I'm preparing one special video for you guys, which is going to be unboxing Rothschild's book. Yes, one by one, page after page, I'm going to uncover all those things, and then we're going to share something about their bond issuance histories and anything related to our discussion, because this is international finance and that is going to be international bond issuance kind of things. But before that, we need to set up some good understanding about the international banking business itself, right? So let's go. Chapter outline, international banking services. Right, you're gonna see some of the largest banks list, and then the reasons for international banking and types of international banking offices. For example, correspondent bank. We talked about core banking before, right? But rep office, and then foreign branches, and subsidiary and affiliate banks, and eject banks, which is more like a US regulation based one. So not too much relevant for Korean situation, but anyway, offshore banking centers and then international banking facilities, all these kind of concepts will be discussed. And then capital adequacy standards. We're going to talk about it because international banking, right? The bank system itself needs to have some buffer, enough of buffer capital, which we typically call it as capital adequacy criteria. Do you have enough of buffer capital to overcome any potential negative shock, right? That kind of thing is going to be discussed. And and on the way, we're going to talk a lot about bank analysis kind of concepts and BIS kind of things, right? BIS, not BS. BIS, right? You're going to see it. Bank of International Settlements. And international money market, we're going to talk about it. And there we have to talk about something called euro currency, like euro dollars, euro yen, and LIBOR kind of rate, right? LIBOR, SIBOR, TIBOR, right? Coribor, what is that? Okay? Euro credits, we're going to talk about it. The currencies, right, that is deposited outside of its domicile country, right? And then forward rate agreements, and we're going to go through a little bit of interest rate risk management with that, and euro notes and euro commercial papers. I mean, it's all about euro credit kind of extensions, right? In different facilities, notes, commercial papers. Commercial papers in Korean terminology, this is aum, 기업 aum kind of things. And then euro dollar interest rate futures contract, this kind of things is going to be discussed. And then international debt crisis will be discussed as well. the history of this, and inevitable thing we have to talk about is debt for equity swap, right? And the solution, the Brady bonds kind of things. We're going to talk briefly about it, but essentially Brady bonds is about U.S. Treasury, the AAA entity, is guaranteeing partially, okay, guaranteeing partially of this distressed companies who's suffering from distressed company, not a distressed country, okay, who is suffering financial crisis. For example, Brazil or Argentina, if they suffer from currency crisis, and then there has to be some debt, some restructuring of the debt, and somebody has to buy that debt. Who's going to buy it? Because investors will be avoiding such high risk debt, but U.S. government comes in over there and then partially guarantees it. So encouraging the buyers to purchase this. Okay, so that's one solution called the Brady bonds. Why is it Brady? Because it was originally idealized by, conceptualized by the U.S. Treasury Secretary called Brady in not George W. Bush, but Father Bush generation. Now, Asian crisis, yes, we have to talk about it because this is Andy Kim's class, and then this is Korea, right? We had it. So what kind of things did we experience before and after? Okay, that kind of things will be very, very, very awfully interesting and fun to look at. Okay, global financial crisis, yes, about 10, 12 years ago already, right? We had that, and then in more detail we're going to discuss what happened before and after. Right, credit crunch, the impact of financial crisis, and economic stimulus package, and what was the aftermath, right? All these kind of things will be discussed. And please bear with me, this chapter turns out to be pretty long, longer than expected, and it may take some time, okay? But compared to my original syllabus, right? I originally thought we're going to be able to cover it within half a week, but more than a week, I guess. All right, a lot of meats to digest. Okay, a lot of interesting things to look at. Okay, so it's gonna be another fun class, as I said before. Now, international banking services, right? International banks do everything domestic banks do, and okay, plus they arrange trade financing, okay? Trade financing, helping import and export, right? And arrange foreign exchange, and then offer hedging services for foreign currency receivables and payables through forward and option contract, okay? Hedging services, offer investment banking services, cross-border M&As, all these kind of things, right? And then IPO in foreign capital market, or bond issuing in foreign capital market, right? All these kind of things they do, right? The world's 30 largest banks. Let's look at the list one by one, actually. Okay, what do you see? On the horizontal axis, you see rank, bank, country, total asset, net income, market value. All right? And this list is based on total assets, right? Market value does not necessarily come exactly together as total assets nor net income, but they are highly correlated. Okay. What's number one? ICBC, 중국공상은행, right? 中国工商银行, right? 银行. And number two, Bank of China. Okay. I don't know. That's I don't know how to pronounce it in Chinese. 中国银行, right? Maybe. Correct me if I'm wrong. Okay. Total assets. What is that? That's in the unit of billion dollars. So 3.4 trillion and 2.5 trillion US dollars worth of asset. And you see that this comes from the sheer size of the economy. 1.5 billion population. what is there that you cannot do with that, right? So it was evident since long time ago, the Chinese economy will take over the United States pretty soon, but it's happening earlier than before, earlier than what you expected. Okay. JP Morgan Chase. By the way, one thing to notice is that Korea is right next to China, and it's feeling that direct impact, right? Whether you like it or not. Right? And then the next one, JP Morgan Chase of the US and 2.4 trillion US dollars worth. And then HSBC Holdings, that's UK bank, right? And Bank of America, okay, comes next. And then BNP Paribas, that's French one. And then Wells Fargo. Have you learned about this Wells Fargo before? It's largely started from where? Some in San Francisco / Minnesota, and San Francisco is California, right? But originally Northwest Bank of Minnesota, which is where I studied, Northwest Bank over there, a bunch of geniuses from Minnesota took over Wells Fargo and made it such a great bank. Okay, and then what's that? The next one is, the Wells Fargo is typically more domestically oriented in the US rather than, it's not that well known in Asia, but that's that. Wells Fargo, Citigroup, yes, Citibank is well known in Korea, okay, because it's based in New York State, and then they have been aggressively going outside, okay. But Citigroup used to be number one like 10 years ago, no, 20 years ago, when I was in your age. The three biggest bank in the US or in the whole world was what? Citibank, Bank of America, Chase Manhattan, right? So three of them. And Citigroup tanked, or which means sucked, during 2009 or 8 financial crisis, okay? They were too much exposed to something called what? CDOs and all these kind of derivatives transaction related to mortgage, subprime mortgage. You're going to talk about it. We're going to talk about it at the end of this lecture, right? And the next one is Deutsche Bank, right? Deutsche Bank, coming from Germany, right? It was established in 1871. I told you before, the purpose of it was to facilitate German people's import and export and globalizing or expanding their empire. Okay, why? Because they did not have their banks specifically serving this kind of trade finance purposes, because the Germany was split into 200 different countries, not enough capital to do international expansion, but newly unified in 1871. So as time went by, they needed this kind of things to support their tradings. And then the next one is Barclays, UK bank, and then the next one is Mizuho Financial. That's Nihongo, which is Japanese, right? Used to be like 30 years ago, right? The top banks in terms of size, okay, 30 years ago, there was Mitsubishi, Mizuho over here, 1, 2, 3 or something like that, top 5. A lot of them moved down the list, right, with the lost decade or lost decades of Japan, okay. Welcome Abe, right? Good luck. I don't care, right? Banco Santander, right, is there, right? Banco Santander of Spain. I told you this is very interesting one, okay, worth studying, okay. Started as the Spain's bank, local bank, and then expanded very successfully all across the world. So very interesting one. And then Royal Bank of Scotland, RBS of the UK, right, is there. And then Lloyds Bank Group. Lloyds, that's British one, okay, Lloyds, okay. The Lloyds Banking Group is one thing I have to tell you. Oh, did I tell you? Societe Generale, right, number 13, right? And then Lloyds Banking Group of the UK. The Lloyds name itself is exactly the same as what's that? The insurance market called Lloyd's, the Lloyd's of London, right? The Lloyd's of London. Double Lloyds. Very strange spelling, but it people say this comes from Welsh style culture, the spelling, right? They have a lot of double spellings, right? I don't know whether they have double A's or double N's or double D's and then double Y's. N.D. Kim, right? But Lloyds, Lloyd's. The Lloyd's of London is just a market for insurance. Was started as just like a Starbucks. It's just a cafe kind of things, just market for the insurance. Lloyd's Banking Group is different. Okay, you go ahead and study their history, right? They are different entities. Now, the next one is what? Ing Group. What is that? What are you doing? I don't know. ING, right? Ing Group. And then that's Dutch ones. Yes. Used to be called ING Bearing, right? The Bearing brothers, we're going to talk about it. In 1995, there was calamity happening in Barings Bank, which was 300 years old British bank, okay, screwed up by rogue trader called Nick Leeson, and hit the bankruptcy, and then it was sold off to ING Group, Dutch one, for $2. Is that right? Right, $2. Piece of, I don't know, like that must be worth two 되게 선생님, right? And then Barings Bank was sold off to ING in 1995, and they are now the 16th largest one. And then the next one is Royal Bank of Canada, RBC, and then TD, the bank, that's Toronto Dominion, that's Canada Bank. And then comes Australia's biggest bank, National Australia Bank and Commonwealth Bank. So any of you who travel to Sydney or Melbourne, you guys must have seen this kind of banks there. And then Bank of Nova Scotia, that's Canadian one. And then ANZ, what is that? ANZ, Australia New Zealand Bank, obviously. You can see the nationality over there. Westpac Banking Group, that's another Australian bank. And Natixis, I don't know, sorry for my mispronunciation, French people, right? Natixis, I don't know. The France Bank and Banque de Montreal, or Bank of Montreal comes next. And US Bancorp, that's Minnesota-based, Minneapolis-based bank, right? Piper Jaffray is the equity investment banking arm, okay? Very solid one. And then Bank of New York Mellon. That Bank of New York was created by one of the founding fathers of the United States. What was that? I'm trying to remember his name, but I forgot. Who was killed by Aaron Burr with gunshot, like dueling, right? But anyway, so very famous one, Bank of New York, and PNC Financial Services, USA, and then oh yeah, Alexander Hamilton is the name, right? Bank of New York, Alexander Hamilton. And then China Huarong Asset Management, right? That comes to 30. A lot of Chinese banks are there these days. Okay, right. Reasons for international banking. Okay, why do people expand their banks to international realm? Right? Why don't you stay domestically oriented? Okay, home sweet home. 이불 밖은 위험해. It's like outside your blanket. That's very dangerous. Why don't you stay home? But the bankers keep going outside. Why? First of all, low marginal cost, managerial and marketing knowledge developed at home can be used abroad with low marginal cost, especially if your destination country, the foreign country, has similar culture with your domestic country, right? The cultural region. differs. So that's one reason you may seek, right? Knowledge advantage. The foreign bank subsidiary can draw on the parent bank's knowledge of personal contacts and credit investigations for use in that foreign market. Essentially, the banking is about people business. Okay, people. What? Isn't it money business? No, 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 no. No, 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 no. Okay? Banking at the low level, that's money business. But as you go up higher and higher, it's more about the human being and talent and information. It's about the human network. Okay? You want to catch the best information, right? So who do you know really matters in banking, right? What network do you belong to? And then do you know the network of key people in foreign countries? How well connected are you? Okay? This is part of the reason a lot of bankers try to go to Harvard, MBAs, or the institutions that give you some networking opportunities with top people over there, right? So it's because this is just like consulting, right? It's all about the network and people and their ideas. Idea about what? Idea about taking over certain companies and selling off to somebody else, right? Finding out great information about investment opportunities out there, or finding out information about the economic shock coming out, right? Negative shocks, maybe. Okay, you can take action one day before or millisecond before, right? Home nation information services, local firms, right? In a foreign market, may be able to obtain more complete information on trade and financial markets in multinational banks' home nation than it's obtainable from foreign domestic banks. So it's all about information. By having more international exposure, you can provide better information to your clients, corporate clients, right? Prestige. Very large multinational banks have high perceived prestige, which can be attractive to new clients. So it's all about branding. It's all about marketing, right? This is finance course, but this is also marketing comes in there. You talk about brand image, right? But brand image associated with those guys with money, right? Prestigious bank. That's so powerful, okay? Like JP Morgan in these days, right? Or the Rothschild in like 100 years ago, right? This makes difference. Why? How does that help your bank to have strong brand equity? Okay, with this prestige image, right? You can charge higher fees. Your bank's cash flow will be way bigger, so that your market cap will be a lot bigger, right? So that's the reputation and prestige that you're trying to achieve over time. It does not come in 1 day or 2 days. It's not 1 day, 2 day business, right? It needs a history, and you need a track record, okay? And then regulatory advantage. Multinational banks are often not subject to the same regulations as domestic banks. Before we talk about that, domestic bank itself, right? It is highly regulated. We call it regulatory overlay, right? Because the bank works as the how do you say, the heart, like a cardioactive pumping machine. Money is the blood, and then the body is the economy, and then the banks are like heart kind of things, right? And because of that importance, the government, right, watches your business of banking very, very closely. Every quarter you have to, and more than a quarter, right, more than a quarter frequency, you have to report to the financial supervisory in much detailed ways. Okay. For domestic, right, banks are under the rule of the domestic government, right? But foreign banks coming in may not be, fully regulated by domestic the supervisory, right? 금감원, how much do they supervise Goldman Sachs in Seoul, right? Or Bank of America in Seoul, right? a lot less than what they oversee Shinhan Bank or Uri Bank kind of guys. Wholesale defensive strategy. Well, banks follow their multinational customers abroad to avoid losing their business at home and abroad. Okay, in wholesale ways and retail ways, you have to be aggressive. Otherwise, your competitors will attack you. So that's the idea about these two last bullet points. Retail defensive strategy. Multinational banks also compete for retail services such as traveler's check and the tourist and foreign business market. You may wonder what traveler's check is, right? Traveler's check. Um, in time immemorial, right? When I was a high school kid, there were such things called traveler's check, right? There you know it's like used as a cash, and then the international check that you can use just like a dollars or anything. These days you don't even carry any cash, so you don't need to worry about it. But the tourist, okay, you need some cash services, right? If you have international banks branches over there, you will be much more convenient as a client, right? So that's the argument here. Transaction costs, right? Multinational banks may be able to circumvent government currency controls. So the transaction cost part, you'll get to that one a little later, but largely because you are accessing the how do you say, the global financial center, right? And then you are away from the home country, then you will be much more flexible in such places as international financial centers, a lot less regulated areas. And then so that's reducing your transaction cost when you're borrowing borrowing your money to do your own business. Growth. Foreign markets may offer opportunities for growth not found domestically, right? Your domestic environment may be limited, right? Depending on the regulation hurdles, right? For example, in the United States, 1980s, right? There was a such rule called Glass-Steagall Act. Okay, Glass-Steagall Act. If you have studied about J.P. Morgan's history, you must have be familiar with this one, Glass-Steagall Act. What was the idea? Let's separate the banks, right? Of investment bank versus commercial bank. We are going to strictly block each other so that commercial banks have to do commercial banking business only. Investment banks have to do investment banking only. What's the difference over there and why did they do it? Investment banking, well, they do a lot of equity investment. Commercial banking, they do a lot of deposit work, deposit services, and then lending business, right? Lending and loan business versus equity investment. Well, what's the difference? Loan business, well, that's for legally protected as a creditor. And then for depositors, you have the obligation to give money back to the depositors, and then the government closely watches it because the depositors are the taxpayers, and the depositors, right? They can run to the government like, give me my money back, and then you don't let the depository institution go bankrupt, right? All these kinds of heavily regulated ones, right? You want to keep these depositors happy. In contrast, the investment banks, they have a lot of equity investment by nature. Right, my dog is barking. 30 minutes almost, right? So, okay. Wait. Okay. So, equity investment compared to loan business, this is awfully risky. All of a sudden, your investment amount, this market value can plunge down to zero in a day, whereas the loan is legally protected, so that you will have some recovery amount available to you even when the borrowers go bankrupt, right? Partially, you have the priority to be repaid. Okay, commercial bank, investment bank, no way, no chance, very risky. What's the trouble there? Once this investment bank portfolio equity investment goes bust, then your balance sheet is screwed up. If investment bank is together with commercial bank, then your deposit liability side will get screwed up together. Okay, uh, nobody, I mean, you don't want that thing to happen. Okay, but essentially that was what JP Morgan was doing 100 years ago. Okay, the superpower guy. Okay, they could do it within one house, investment banking and commercial banking together. But the US government and the central bank and supervisory said that's too risky. Okay, JP Morgan, uh, besides that guy and other guys following that footstep, too risky. Okay, too many bank runs happening. So let's separate these two different divisions: investment banking, one company, and then commercial banking, other kind of the other company. Okay, don't touch on each other. Right? You're not the same company. No, that was Glass-Steagall Act. Okay, that was U.S. regulation. In contrast, in the Europe, the split between the investment bank and the commercial bank was not that much drastic. Okay, so they were a lot more allowed. Okay, to do business together, and that's why U.S. banks, right? They had a lot of international exposure or foreign banking subsidiary in London. Okay, US banks having subsidiary in London. There you do investment banking business, even though your home institution is depository bank, right? Or commercial bank, having investment bank subsidiary outside in London, kind of things, to circumvent the US regulation. Okay, so the regulatory circumvention, you can try it. Okay, right. And then yeah, risk reduction, greater stability of earnings with diversification. Yeah, this goes back to our portfolio theory, right? Diversify your holdings in your portfolio, and then don't put all your eggs in one basket, right? So that you will have some stable income coming in, right? Stable cash flow from your business. So that's the idea over there. All right.